Hello, this is Sunko, the Korean bro. Today is 2022, August 16, and let's look at today's markets. Okay. Hmm. What do we have tonight? Last night, we had a good upward trend. These days, I'm seeing really good upward. In the past couple of months, we've been having like negative trend, like downward trend, but so far, it's been going good. It's been going great. Like this week and last week. Uh, First one that I'm going to look at. Let's pick some articles first, okay? Three stocks that lead the Nasdaq bull market. Companies facing first tax and stock buybacks in Biden bill. U.S. futures turnaround and strong performance from retailers. Um, Walmart leads retail higher, but will the group follow? Three blowout earnings reports that could mark turning points. Hmm. Will CrowdStrike extend streak of topping earning views? Is Ford about to crush work horse group? Hmm. Is Uber bait in switching its way to profitability? Skyward Solutions is worth a look at these prices. Uh, Disney shares just gave investors a massive signal. Can you guess which EV stock is beating Tesla? Is AMC Entertainment pulling a fast one on the APEs? Here is a simple four-stock portfolio that can outperform the market. Okay, let's read one by one. Okay. Hmm. Um, Back on June 16th, things were looking pretty green for Nasdaq 100. Hmm. The tech-heavy index slipped to its lowest level of the year amid the mounting recession and geopolitical worries. 34% was slashed from the benchmark's record peak. Fast forward just 2 months, and things look quite different. The Nasdaq has surged more than 20% from its bottom, assuring in one of the most unlikely bull markets in recent history. Fast forward just 2 months and things look quite different. Nasdaq has surged more than 20% from its bottom. Yes, yes. Back on June 16, things were looking pretty green for Nasdaq 100. The tech-heavy index slipped to its lowest level of the year. Amid the mounting recession and geopolitical worries, 34% was slashed from the benchmark's record peak. Fast forward just 2 months, and things look quite different, right? The Nasdaq has surged more than 20% from its bottom, assuring in one of the most unlikely bull markets in recent history. Despite higher food, housing, and electricity prices, investors are feeling optimistic that inflation peaked earlier this summer. Mm. Yet, with many economists expecting the Fed's rate hike battle against inflation to last a while, U.S. equities could find it difficult to build off their current momentum. The most bearish of prognosticators say the market will eventually test its previous lows. Whether the current Nasdaq amounts to a temporary rise or an extended stampede remains to be seen. Hmm. Regardless of its staying power, here are the three stocks set to lead the change. Regardless of its staying power, here are the three stocks set to lead the charge. Apple, what is the Nasdaq's most important stock? Not Apple, Amazon, Tesla. These are the three most important companies among Nasdaq 100. And these three are the ones that seem likely to lead the market, to lead the Nasdaq bull market. But we'll see, because Here it is. Whether the current Nasdaq bull amounts to a temporary ride or an extended stalemate remains to be seen. Okay. The next one, U.S. futures turn around on strong performance from retailers. Wall Street nearly recoupled overnight losses and was inching toward gains Tuesday after some bellwether retailers reported strong second quarter earnings, suggesting that Americans have continued to spend despite the worst inflation in 40 years. Wall Street nearly recoupled overnight losses and was inching toward gains Tuesday after some bellwether retailers reported strong second quarter earnings, suggesting the Americans have continued to spend despite the worst inflation in 40 years. So here it is. Regardless of what is happening these days, people still spend their money. Mm. Despite the worst inflation in 40 years, because they've got to spend, right? Um, so some retailers reported strong second quarter earnings. Okay. Futures for the Dow and S&P each fell less than 1% in pre-market trading. Retail giants Walmart and Home Depot, whose quarterly financial results often give investors insight into broader consumer habits, both reported strong second quarter earnings, giving markets a boost before the opening bell. Mm. Walmart earned $5.115 billion or 1.77 adjusted for one-time caution charges, easily topping Wall Street's target of $1.62 per shares. Sales also beat analyst projections and shares rose more than 4% before the opening bell. Okay, next one. Walmart leads retail higher, but will the group follow? Okay, Walmart leads retail higher. So among a lot of retail companies, Walmart is like the one number one that leads retail markets. And will other groups follow that trend? We'll see. Issued a far better than expected quarter second earnings report, and shares are moving higher in the wake of it. The move has the stock up nearly 5% in pre market trading and above a previous resistance target where upward momentum could build. The question is if the market will follow through on the move, and more importantly, if other retailers would issue similar reports because there is still risk in the market. Walmart issued better than expected results and raised the guidance, but to a range in line with the consensus, which means much of the year's strength has been seen, and future quarters could be weaker than expected. Okay. Competitors like Target report this week as well, so there could be a volatility ahead, regardless of the ultimate direction of the market. Okay. Competitors like Target report this week as well, so there could be volatility ahead regardless of the ultimate direction of the market. Walmart moves up on strong results, EV guidance. So, what I can see is that we are having really great upward trend. Even Walmart shows better than expected results, quarter second results, which turns out to be really great. And but what we see is that what we have to look at is will this Walmart lead retail industry? Walmart is like one of the companies, like number one companies among retail companies, and if this Walmart uh shows that much result. Will other companies follow the trend? We'll see, right? Three blowout earnings reports that could make turning points. Earnings report, okay, it wasn't that bad after all. Okay, first statement. With the second quarter earnings season almost in the books, words about the Russia negative earnings surprises have proven to be unfounded. According to the latest insight from FactSet, roughly 3 out of the S&P 500 companies reported positive EPS surprises. 3 out of 4. That's really huge. Like 75% reported great earnings, reported positive EPS surprises on par with the historic norm. On the other hand, the big splash variety of earnings bits have been harder to come by. The average magnitude of the bits has significantly lagged past. Three blowout earnings reports that could mark turning points. Has ABBA lab stocks bottomed? Has Citigroup stock reached the turning point? I don't see one last company, but okay. Last month, Abbott Laboratories. Abbott Laboratories. Let's look at Abbott Laboratories. Okay, what is Abbott Laboratories? Posted quarter second EPS. They marked 22% year over year growth and crushed the consensus estimate by more than 25%. The surprise was led by strong performance in the company's diagnostic business, which delivered 36% revenue growth, thanks to a strong demand for rapid COVID-19 tests. Okay. So Apple Laboratories pretty much produce medicine or like something that cures people's illness in terms of COVID-19. Okay. But has this stock bottomed? That's our concern at this point, but it's none of my interest. So we'll skip to next one. Okay, will CrowdStrike extend its streak of topping earnings views? Cybersecurity stocks have been on the rise in recent weeks. Okay, as companies like CrowdStrike Holdings rally from previous lows, CrowdStrike specializes in um, cloud-based protection for enterprise customers. It offers intelligence about various cyber threats and also provides security and info tech operations management services, mostly on a subscription basis. Okay, on a subscription basis, CrowdStrike, key player in endpoint security, to turn for the protection of computer networks that are remotely connected to other devices. With more professionals working from home and company networks, endpoint security has become even more important in the past 2 years. Let's repeat this one more time because it seems it's really important. CrowdStrike key players in endpoint security, like myself. Like I'm the just regular, just normal customer, right? I'm not like company customer like me as an individual living in Korea, just normal guy, right? 30s. CrowdStrike Keebler and endpoint security, the term for the protection of computer networks that are remotely connected to other devices. With more professionals working from home and company networks, endpoint security has become even more important in the past 2 years. Meanwhile, hackers and others will ill intentions are upping their games. Another reason cybersecurity is high on the list of items corporations need to invest in. Okay. The stock is up 43% in the past 3 months from a low of $130. Shares closed Monday at $201. On CrowdStrike's chart, a trend line shows near-term potential for rally to around $215. In addition, over the next 12 to 18 months, analysts have a price target of $247, according to Market Be Raising data. That's a potential upside of 22% in Wall Street's consensus ratings buy. Rolling out new services. Last week, the company unveiled artificial intelligence power indicators of attack delivered on the CrowdStrike Falcon platform and powered by the CrowdStrike Security Cloud. According to the company, these new detection and response capabilities stop Emerging attack techniques enable organizations to optimize the threat detection and response lifecycle with spread, speed, scale, and accuracy. Palo Alto Networks, Fortinet. Let's look at CrowdStrike Holdings and see where its prices. CrowdStrike Holdings. Hmm. Is Uber bait and switching its way to profitability? Rideshare and delivery giant Uber has seen its stock rally over 50% off its lows, but is still down minus 26% on year. The nation's largest rideshare network continues to lose money despite seeing its sales rebound sharply. From a fundamental view, Uber has been a boggling money pit that has blown through billions of investor dollars. However, it's also become a part of the English slang as a verb describing an ever on demand culture. Where products and services can be quickly and conveniently ordered wherever and whenever desired at the tap of a smartphone. The CEO has stated that the company is focusing on profitability over growth, and technically they did hit is focusing on profitability over growth, and technically they did hit adjusted profits, which Wall Street took as great news, shooting the stock up nearly 30% in a week. For optimists, the company is improving and expanding. Its recent partnerships grew to include Disney Plus, offering Uber its customers 2 free months of the Disney bundle, along with taxi companies like IT Taxi in Italy, and electric vehicle partnership with Hertz for drivers to lease Tesla EVs to provide rides. Riders can testify to paying more now for Uber rides than they did pre-pandemic. So here it is. Uber, giant company. They what they provide is ride share and delivery giant, and like uh so far they were like they were like in loss. You know, their profit was not much, but now they're like focusing on profitability over growth. Uh, and they did hit adjusted profits, and they are even hmm, having like a cooperation with a lot of companies. It's not just a lot of companies, the big companies. So we'll see. Two businesses in one, path to probability, or money pit, or both. Skyward Solutions is worth a look at these prices. Skyward Solution is an undercovered and underappreciated asset working in the semiconductor industry. The company does not make or market semiconductors, but manufactures a wide range of semiconductor-based components for business and industry of all verticals. In this light, it is well positioned as middleman between the semiconductor industry and the rest of the manufacturing world, and the results prove it. The company is not only growing but guiding strongly, increasing its dividend, which should help support prices over the long term. Skyworks. Skyworks leverages a diversified. Skyworks put in a very solid quarter set third. That was driven by the company's diversified approach and demand across end markets. The company reported $1 billion in net revenue for a gain of 10% over last year, which matched the analyst consensus. The gains were driven by notable wins in the Wi-Fi and 5G arenas and were compounded by strength in the EV market as well. Importantly, our increasing content rich in automotive, data center, infrastructure, and other diversified sectors is generating solid momentum going into the second half of calendar 2022, leveraging a wide array of premium products. Our our engagements with the industry's most impactful customers are resulting in unparalleled connectivity spanning on ever expanding set of applications and markets. Hmm. Disney shares just gave investors a massive signal. Okay, an 8% gap. I'll just start Thursday's session should tell you everything you need to know about how investors are feeling about Disney. 8% up, which is really big, and investors feel something, right? The home of Mickey Mouse released its fiscal quarter third earnings report yesterday and crushed analyst expectations while doing so. Both top line revenue and bottom line earnings came in hot, the latter up more than 25% year over year. Can you guess which EV stock is beating Tesla? Consider a position. Managing risk. Hmm. With almost 80% rally since the middle of May, there is a strong case to be made for considering a long position electric vehicle maker Neo shares. While they were well able to capitalize on the euphoria that swept equity market before and after the COVID crash, investors have had to watch them give up as much as 80% over the past 18 months. But with the broader equity indices staging on a solid rally themselves, it's looking more and more likely that this is more than just that cab bounce. Abbott, Pure Storage, Costco, Nvidia. Hmm. Diversification is the edge for any portfolio. Rising inflation is impacting discretionary consumer spending. These stocks tend to be good recession hedges by either thriving a recessionary period or are essential products uh, needed regardless of the economic landscape. The following four companies are firing on all cylinders and are leaders in their respective industries, weathering inflationary headwinds. Okay. Pure Storage, Data Warehousing, Data Storage, Pure Storage, PSTG. It's the world's most advanced data storage solutions provider. As the world continues to churn out oceans of data, it has to be consumed, stored, and managed. Regardless of the economic climate, data will also be a constant. Pure Storage provides a portfolio of enterprise storage solutions, including a storage as service across multiple clouds through a subscription model and delivering hybrid cloud architecture for apps. They continue to gain market share in the enterprise storage market. Their fiscal quarter first 2023 earnings beat estimate by $0.20 per share, while revenues grew 50% year over year, beating analyst estimate by nearly $100 million. Okay, now let's go over to Yahoo Finance and see what we have. Okay. Huh. IRA's rising tide for the anti-EV industry analyst. Walmart CFO toast consumers' inventories back to school gas prices after earnings bid. U.S. housing starts tumble in July. Building permits fall. JP Morgan says the stock market is poised for more upside. Here are two stocks that banking giant likes. I'm gonna very look at it. I will receive. Billionaire Ray Dalio loads up on these three strong buy stocks. The company that built Elon Musk's tiny home has now raised over $74 million from retail investors. Uh, Comment LinkedIn add to growing list of tech layoffs. Okay. I've just picked a few articles, and we'll go over one by one. Okay, since we got limited time, we'll just first look at articles that I'm most interested in. The one that shows the one that says like two stocks that you have to look at, like two stocks that has like huge potential, like upside trend, something like that. You know. JP Morgan says the stock market is poised for more upside. Here are two stocks the banking giant likes. Okay, here it is. The first JPM pick is Beijing, a clinical stage biopharmaceutical company with its words a broad and deep pipeline that takes a shotgun approach to the field of oncology. Not my interest. Xenon Pharmaceuticals. Okay, skip because they're all has some. They all had something to do with pharmaceutical thingy. If you really want to be rich, you need to do this. As Mark Cuban. Okay, this seems like an interesting article. Let's read this aloud, and we'll see what he thinks. Okay, Hmm. We'll see what he thinks. Recently, we came across a simple piece of money advice from billionaire entrepreneur Mark Cuban on his Maverick blog that we felt resonated in today's money-stressed world. Cuban answers the question, so what should you do to get rich? With this point, first and foremost, save your money. Save as much money as you possibly can. Every penny you can. Instead of coffee, drink water. Instead of going to McDonald's and mac and cheese, cop your credit cards. If you use a credit card, you don't want to be rich. The first step to getting rich requires discipline. If you really want to be rich, you need to find the discipline. Discipline, okay. Ask yourself this question, then do a deep follow up on it. The first step is you have to want to make changes as certified financial planner. Do I really want to achieve this goal? If the answer is yes, truly yes, really yes, then you're on your way. Create a specific and reasonable goal. Look at your past behavior to avoid future mistakes. Reward yourself along the way. Use these simple hacks. When false, minimize temptations. Know that mistakes will happen and have a plan to get back on track. Just a boring article. Everyone knows, you know. Builders First Source. We'll start with Builder First Source, a Dallas-based supplier of construction materials for the home building industry. Builder First Source has a wide range of products from a prefab framing to radiant lumber to roofing shingles to insulation and waterproofing to siding windows, just to name a small selection. The company also offers finishing products for decking doors, ceiling stairs, and interiors. Support services include drafting and estimates. Syrup Therapeutics. Okay, no. Brunswick Corporation. Now we'll turn to the leisure sector, where Brunswick builds and markets a line of boats and marine engines, as well as their accessories and parts. Okay, let's read this one. JP Morgan Chase CEO Jamie Dimon blasted working from home and Zoom as management by Hollywood Squares using the dated TV show reference on a call with the bank's wealthy clients last week to reiterate his long-held preference that workers return to the office. Uh, Demon argued on Tuesday called the remote work creates a working environment that's less honest and more prone to procrastination. A lot of people at home are texting each other, sometimes saying what a jerk that person is, said the Diamond. Diamond's remarks come as a tussle between management employees on a return to the office heats up and possible economic slowdown threatens to erode employees' leverage to stay home. Remarks come as the tussle between management employees on a return to the office heats up and a possible economic slowdown threatens to erode. In the past, Diamond has said that work from home is a poor fit for JP Morgan's employees. Last year, he argued that remote work doesn't work for people who want to hustle and doesn't work for culture, doesn't work for idea generation. So basically, this is that JP Morgan CEO, he doesn't like the idea of work from home. He says if you work at home, people text each other and talk about uh, upper management and have bad words about them, have bad words about them, and they just pretty much talk. They just talk about what jerk they are. You know, it's that simple. So next one, this is where millionaires keep their money. Okay, let's read this one. Right. Uh, Stocks and stock funds. Okay, some millionaires are all about simplicity. They invest in index funds and dividend-paying stocks. They like the passive income from equity securities, just like the passive rental income that real estate provides. They simply don't want to use their time managing investments. Ultra rich investors may hold a controlling interest in one or more major companies, but many millionaires hold a portfolio of only a few equity securities. Many may hold index funds since they earn that decent returns and you don't have to spend time managing them. They also have a low management fees and excellent diversification. Millionaires also like dividend paying stocks for the passive income they provide. Of course, there are also interested in capital appreciation, but for some, that's less of a concern than generating current income. Private equity and hedge funds, commodities like gold, silver, mineral, rice, or cattle, to name a few, are also stores of value for millionaires. Hmm. But they require storage and have a level of complexity that many millionaires simply don't want to deal with. Alternative investments, cryptocurrency at the bottom. Millionaires have many different investment philosophies, so it's difficult to generalize concerning where they keep their money. However, all of the above are legitimate investment for millionaires. They have a desire for a reduction of their risk. So many prefer diversified investment portfolios. More than one of these investments can be combined to try to enhance wealth. Mm. So millionaires, they got a lot of ways to diversify their portfolio because if they just focus on one thing, if they put their money into only one, it can be quite a risk. It can be quite risky. Mm. So rather than just putting all their money into one way, they use a variety of ways. Paladin common LinkedIn ad to growing list of tech layoffs. So a lot of giant companies are laying off their employees. That's the point here. Two monster growth stock that could reach new highs. Balance health and what else do we have? The second stock we're looking at is the Cogent Bioscience, another clinical stage biopharmaceutical research. Cogent has one drug candidate at the clinical trial stage. Mizzou classed the NIP and several research tracks at the preclinical stages. Mm. And the first I will look at is Baloo's Health, a clinical stage biopharmaceutical firm, where the research focused on an area that most of would probably never think about: hypersensitivity. This is a condition in which the patient is excessively sensitive to some stimulus, dust, or pollen or chemicals, which can cause a range of symptoms, including chronic cough. These are the five best stocks to buy and watch now. So what are they? Hmm. We got Vertex Pharmaceuticals, AutoNation. What is AutoNation? AutoNation. What is AutoNation? AutoNation. Costco, Equinor, Builders First Source. Builders First Source. Okay. AutoNation. Let's look at AutoNation first, okay? Hmm. Hmm. It's a big company. Through its subsidiaries, operates as an automotive retailer in the United States. It's a retail company. Hmm. The company operates through three segments: domestic import and premium luxury. It offers a range of automotive products and services, including a new and used vehicles, and parts and services such as automotive repair and maintenance, and wholesale parts and collagen services. The company also provides automotive finance and insurance products comprising vehicle services and other protection products, as well as arranges finance for vehicle purchases through third-party finance sources. As of December 31st, 2020, it owned and operated 339 new vehicle franchises. Yeah, well, it's a hey, man. It's almost over. 2 minutes left, and I'm done with it. Okay, come on. Okay. Um. Okay. Okay. The last company that I want to talk about is Equinor. Uh, Here it says the five best stocks to buy and watch now, and they are Verdicts Pharmaceuticals, AutoNation, Costco Wholesale, Equinor, and Builders First Source. Nothing has got to do with software, because Builders First Source is the company that produces home materials, and like Costco Wholesale is like it mostly deals with hmm, you know retail services, and like AutoNation is also a retail company. Pharmaceutical, it's one that has got to do with biotechnology. So we'll just look at Equino for the last time, and then we'll just finish this mm, YouTube live, but since my girlfriend is about to be angry, I'm just gonna finish this YouTube live session, and we'll just talk about it tomorrow. Okay. Uh, okay. Let's wrap this up, and then I'll see you guys tomorrow. Okay. Bye bye.